Welcome to Closing Trades right here on ET Now. So the last 1 hour of the trading session, we'll try to decode what should be your strategy amidst this market, because this Monday morning we have seen benchmark indices moving higher, and throughout the day we have seen Nifty as well as Bank Nifty holding on to the gains, except for the last 15 minutes or so where we are seeing a bit of a cool off. But the star performer today is indeed the heavyweight Reliance, because post the earnings, well, of course, there has been a valuation comfort and nothing wrong, or rather nothing negative has come out into the earnings fine print with respect to their upcoming businesses, especially in the new energy business. That is seen to be taken positively by the analyst community. A 5% jump on this heavyweight is what we are seeing. A lot of sectors apart from Reliance that are buzzing in today's trading session, be it some of the metal counters, they are seen to be shining bright. Select pharma companies are doing well and seeing a bit of a rebound, case in point being Sun Pharma, Lupin, as well as Dr. Reddy's. Let's watch out for that. But on the flip side, we have seen HCL Tech that is down about in the trade right now. A bit IT seem to be taking a bit of a backseat, and just a while back we also had the KPIT Tech numbers, though the numbers don't look that bad. But this time the management has not given any guidance, so that is seen to be taken a bit negatively by the investor community, and that stock has just lost all of its gain post its earning. Other than that, ITPI Bank numbers too on the bottom of your screen, wherein the profit has seen a jump of 26% on a YOY basis, and that seems to be a decent set, while the NII has seen a decline of almost 11%. But nevertheless, with the banking in full steam, and especially look at the move in some of these PSU banking majors, case in point being SBI, PNB, BOB, they are the top performers in the Nifty banking space. So definitely great moves on the benchmark indices, and for now we are holding very well when it comes to the movers, and a lot of sector churning underway. But the key question is what you should make of the market, and in the last 1 hour, what should be your trading strategy? Let's take this discussion forward with our guest on the show. And let me welcome Deven Choksi, who is the Managing Director of DR Choksi FinServ Private Limited, joining us on the show. As well as we also have Kunal Bothra. I can see Kunal on the screen. So Kunal, firstly, let me come to you to know the levels for Nifty as well as Bank Nifty. It's been a great day throughout, but do you believe that for today the move is largely in the price, or rather in the last 1 hour we should just consolidate at these price points, or do you believe that there could be some more move in the offing?
Yeah, good afternoon. So I think largely we are done for in terms of the market range today. What we've seen, Srishti, is that in the last 3-4 days, the move for the index is still much more steep. So we are looking at 250 points on an average index moves on the Nifty, that is, and almost 500 points for the Bank Nifty. That's almost an ATR on an average true range of 1% for the Bank Nifty as well as for the Nifty. This comes at a point when the India VIX is still at 16.5 to 17.5 kind of a range. What generally happens is that once the VIX stagnates or at least drops down a little bit, you see the ranges narrowing for the index. So far, I would believe that we are still into that high volatile zone for the index. In terms of support, we are holding on to that 24,000 mark. 23,800 is the support which I pegged up for the Nifty in the last week or so. We managed to have a retest towards that 23,800 mark and bounced off from those levels. And I think now on the upside, we should be looking at 24,500 to 24,800 as a potential target range for the Nifty.
Right. Good afternoon to you, Kunal. Good afternoon to you, Mr. Choksi. Thank you so much for joining us. And Mr. Choksi, what a great day to actually have you on the show, given the fact that you have Big Bull Reliance Industries 5% uptake. It's been a while that we've seen this one actually move with that sort of a pace. And you've been tracking Reliance Industries for years and for decades now. How would you actually put this sort of earnings into a bracket for Reliance Industries? Do you think that now it is the time to actually focus on the next leg of up move for Reliance? It would be that impending Jio platform listing, or what is the key trigger that you are watching out for Reliance, and actually that sort of a outperformance coming in from the stock?
Yeah, good afternoon. Well, I think the more importantly in the fourth quarter result, one very prominent thing which has emerged, and that is the consumer-facing businesses, the Jio platform and retail. Both of them put together, they are probably 60% of the total EBITDA of the company vis-a-vis the O2C business and the oil and gas exploration business along with others. So I think what one would probably drive a point here that the consumer facing business for the first time have crossed, I think, the contribution in EBITDA compared to the mainstay business of the company, which is hydrocarbon based, which means that I think the larger amount of growth is now being seen in these businesses, which also means that having done good amount of restructuring, particularly on Reliance retail stores, wherein they closed some of the non-performing stores and added the performing store formats, I believe that it is likely to grow in a vicinity of around 15% odd in retail itself. And at the same time, Geo platform is likely to contribute in the range of 15 to 20% kind of a growth in the current year, 25-26, given the fact that they already implemented the large capex program under 5G. So to a greater extent, I think this is the key takeaway from the result as I see it. Fortunately, oil to chemical and oil and gas business, I think, should be looking better in the current financial year now. Also, due to the fact that the crude oil prices are remaining lower and the better GRMs are expected in the current quarter and after for Reliance Industries. And I think the last one, which is the capex program, which they have undertaken in the renewable segment, is also likely to see the light of the day. Apart from seeing the Geo platform probably getting announced on the listing side of the activity. So this is some of the key takeaways which I find that I think makes the stock more interesting than before.
All right, that's the take coming in on Reliance. Definitely a great move. But Mr. Choksi, do you believe that with respect to the points that you just highlighted, the move that we are witnessing in Reliance today, it's just the start?
Well, you can say so, because I think the majority of the capex programs are over, and particularly in the consumer-facing businesses. Now, the capex program would probably limit itself to two areas: the renewables, of course, and in some segment, I think the O2C business as well. So, I guess I think the growth momentum will continue as far as the company is concerned. And the significantly large amount of underperformance of Reliance in previous quarters probably also means that I think participation could possibly increase now as far as the market participants are concerned. So yes, I think on one side fundamentals, followed by the higher amount of participation by the market participants, could possibly keep the stock price a little bit more upbeat.
Kunal, let me come to you. And do you think up ki bar it will be Reliance Industries? And finally, when you say up ki bar Reliance Industries, it will actually stay true to it and actually outperform, because we've been actually waiting for that outperformance. You in fact charted the fact that it will see an outperformance. From there on, somehow you find that resistance for Reliance has not been able to break past those resistance levels. What's your take? Now it's time, it is confirmed that this outperformance will be led and it is here to stay.
So it looks like, Cheryl, so these are all developing phases for stock prices, because there's a natural reaction to the stock on the back of the news flow in terms of results. And then post that, I think we then need to see that whether the actual supply and demand for the stock price persists for Reliance Industries. Now today what's happened is why today's move is very important. Of course, not just in the context of the results, but the technical part for Reliance Industries today is that for the first time, I think if I'm not wrong, in the last 2 or 3 months, the stock has managed to break past about the 200 DMA. So this is a big breakout for Reliance Industries. And historically, whenever the stock has managed to break past about the 200 DMA, even if it persists about those averages or sustains about those averages for say a couple of weeks, it actually sees a much more bigger follow-through up move. And then the stock starts to go back into a trending phase. So I think it's more of a work in progress chart when I look at this. Say in the next few days, if you see the stock holding on to this 1350, 1400 kind of a range, for Reliance Industries, we could be looking at the stock moving up higher. But in case if the stock say drifts down lower, breaks below the 200-day moving average and doesn't persist above those levels or sustain above those levels, then we could be looking at a reversal of sorts for the stock, or maybe some sort of a profit booking. So I would probably peg this on in terms of the indicator levels, and 200 DMA is something which is going to be very, very important, because historically it has had a very significant impact on the trends for Reliance Industries.
That's about Reliance, why this stock is moving away, and do you still have an opportunity for that to go ahead and put some money right here? We've got the fundamental as well as technical view. But with this, viewers, it's now time to slip into a very short break in this edition of Closing Trades. Don't go anywhere. We'll be right back with more on the other side.
Welcome back. You're watching Closing Trades right here on ET. Now, if you look at the markets, yes, we are holding up with the gains of about % or so. A lot of earnings actually trickling in. You also have Aditya Birla Sun Life AMC that's come out with their numbers shortly. Their profit is coming at around 228 crore rupees. You have that is against 360 crore rupees a year ago. I beg your pardon. 227 crores is a profit against 207 crore rupees a year ago. The revenue is coming at around 423 versus 360 crore rupees on a year-on-year basis. So that is Aditya Birla AMC. Let's take a look at what the stock is doing at this point in time. Remember, we are in the thick of earnings season. A lot of stocks actually reacting to their earnings in today's trading session. As you can see, ABSL AMC has seen a sharp spike post their earnings. But one stock that you can't take your eyes out of in today's trading session, it has to be Reliance Industries. 5% up move coming in for Reliance Industries, and this is after a long time of outperformance that we've actually seen Reliance posting its best day in almost a year. And this is after their Q4 earnings. We did speak to Devain in depth about it. We did speak to Kunal also talking about how the stock looks on the chart. But I have Varun here with all the analysis from the research team to tell us about this. And Varun, I was reading a very interesting data point on Bloomberg. There are about 92% of the analysts that are covering Reliance Industries have a buy rating on this one. And this is just before the earnings, which means that that fortune has changed now, isn't it?
Definitely. So there are many analysts who are having a buy rating on the stock. And in fact, if you look after the results, no doubt there are many analysts who have actually upgraded the stock. In fact, they have raised the target. No doubt the target raise is not much, but yes, if you look around 10 to 50 rupees, there is an increase in the overall target for Reliance Industries. And yes, there are brokerage houses who are actually, betting big on Reliance Industries. So what has changed actually, if you look, after 3rd June 2024, this is the biggest rally in Reliance Industries. At that time, the rally was around 6%, and now we are seeing more than 5% rally in Reliance Industries. And in fact, in a single day, Reliance Industries have added 1 lakh crore of market cap. So that's a big thing in a market like this. If you look at the results were more or less mixed, because if you look at the PAT, the revenues and EBITDA, that was above our estimate, but the margins, they were actually below our estimates. If you look at segmental performance, the oil to chemical business, it has performed good. It was expected to be subdued. The oil and gas, yes, it was subdued, but if you look at the other businesses, the digital business, that was good. For retail, we are expecting the EBITDA to go up by 10%, but it has increased by around 14.4%. Also for Jio, if you look, the overall results were good. And ARPU especially, we are expecting the ARPU to come at 205 rupees, but it has come at around 206 rupees. So it has outperformed what we were expecting. Other than this, if you look, what brokerage houses are saying, they are saying that the new energy business would be the next leg of growth for this company. And in fact, Nuvama is estimating the new energy PAT share to increase by around 12% by FY30. Also, if you look at other brokerage houses, they are betting big on the retail business, because management themselves have highlighted that from Q1 FY26 you will see good growth in the retail business, and because of this, there are brokerage houses like Motilal, CLSA, Nomura, JP Morgan. They are betting big on the retail business, and they expect a big contribution to come from that. Also, analysts on the street are expecting the ARPUs to rise from here as well. Some are expecting the ARPUs to go by 210, 220 rupees as well. So this will aid the overall growth of Jio going ahead. So if you look at the results, yes, they were a bit mixed, but the commentary was good, and that's the reason we are seeing a big rally in Reliance Industries, a day where the company has added 1 lakh crore in market cap itself.
Thank you so much, Varun, for getting us all those details. But with this, let's move on and let's put the spotlight on the banking space, because definitely a great move on Nifty Bank Index is what we are seeing. And especially the financials are moving up one way upward. We will talk about what's been happening within the banking space, but within the NBFC space, all eyes on Bajaj Finance, set to report its Q4 earnings with both profit as well as PPOP are expected to jump on a YOY basis. But the margins is expected to contract on a sequential basis. Why is that so? Let's go across once again to Varun, who is standing by with all the details. Varun.
So if you look at the quarterly update that Bajaj Finance has given, that was good because the customer acquisition that the company has done was good. The AUM growth, that was also good, and the loan growth was also good for this company. If you look at the new loans book, that was up by around 36% on a year-on-year basis, and the AUM that has grown by around 26%. If you look at the deposit growth, that has also shown a good growth of around 19%. Because of this, because of the support by the healthy customer acquisition and also rollout of new products, we are expecting the overall growth of this company to be good, and that's the reason we are expecting the NII to go up by 23% and the PPOP to go up by 27% and the profit to go up by around 19.5%. Now the margins, if you look, they are expected to contract a little bit in this quarter because some of the operating levels that the company used to get, that would flow in the coming quarter. We have seen rate cuts that would impact the company in the coming quarter itself. Yes, but the interest expenses, if you look, they are expected to peak out this quarter, and hence this quarter might be the last quarter where you are seeing some decrease in the overall net interest margins for the company. From next quarter, we are expecting the net interest margin for the company to actually increase. The credit cost, they are expected to decline by around 5 basis points this quarter, and also the overall collections and recoveries, they are expected to stabilize a bit, and that will help the overall profit and loss and also balance sheet of the company. Other than that, keep an eye on overall guidance of the company, and also other than result, the company is also going to announce bonus or stock split. So that's also an important event that you need to keep and watch on.
Certainly a bonus or a stock split could be in the offing. So let's watch out for Bajaj Finance, and definitely this has been an outperformer because on a YTD basis, the stock is already up over 30%. So let's watch out for that. But within the banking space, Devin, what we are seeing today is the PSU banking names are participating very well. And Devin, in the past 2 months, if I see private versus the PSU banking index, then the PSU banking pack has definitely outperformed. In the past 2 months, PSU bank index is up 20% versus the private bank index, which has gained almost 14%. How do you see both of these segments performing, as well as which one is your preferred bet and which could outperform in the times ahead?
Well, I think we'll take up this question in two parts. I think importantly, most of the PSU banks' treasury book will look up in this particular quarter because having seen 2 successive rate cuts, most likely, I think you're likely to see in the current quarter included the mark-to-market gains on the hold-to-maturity portfolio that the banks are having on the GSEC. So that will probably smartly show a higher amount of growth on a mark-to-market basis because of the resultant fall into the interest rate and the yield improvements. So that is where probably most of the public sector banks' up move can be explained or justified. Looking at the fact that I think the rate cuts are just begun, and then another 4 to 6 quarters of rate cut will probably continue. In my viewpoint, I think there is the trend which these banks are assuming at this point of time. Otherwise, though other fundamentals, they remain better, but at the same time, nothing significant about it. Some of the large private sector banks, that's the second question, some of the large private sector banks, in my viewpoint, I think would relatively remain stronger, largely because of the size that they have already got catered into the large segment of customers. And at the same time, I think lower cost of fund, the NIM is on the improvement side, and the dispersal is on the higher side. So it's a sweet spot. You're getting the advantage of higher dispersals, and better NIM promises to produce better profitability for the companies.
Right. Good afternoon, Aditya. Thank you for joining us. And I wanted to put that sort of a question to you as well. Banking space has seen a very good run-up, solid up move coming in the entire banking space. And that's the sector that everybody is talking about, that's where you park your money. But what's your take in the banking space? It is the private sector banking space that is the place to hide, or do you think PSU banks also stand a chance?
Good afternoon, Cheryl. Thanks for the show. Good afternoon, Shrishti as well. I think definitely one should look at banking index as a must hold in their portfolio. And just to add to it, I think so. The first leg of rally we've seen in the private sector banks, if you closely look, it's more of the smaller private sector banks which are participating now. And coupled with that, I think the PSU banks are also chipping in. And if anything, I think so the rally is only going to get stronger in the PSU banking space. So I definitely feel like one should stay put in PSU banks. If you don't have these stocks in your portfolio, it's a very good time to add them in the portfolio, because from here on, clearly, I think the likes of SBI, Canara Bank, PNB, all three stocks are going to outperform their private peers, and it's a good time to add on to them in the portfolio. Just to give a few levels on these banks, SBI, I think, so at current levels offers an excellent risk to reward. It's broken out from a consolidation on the downside. 800 is a very good support area. Go along with the stop loss at 800. Look for a target of 860 on the upside. If we talk about Canara Bank, I think so that too is offering an excellent risk to reward. Again, a good consolidation going on there. The move will accentuate further above 100 levels. So I think one can definitely add at current levels. Add further above 100, look for a target of 105, 110 on the upside with the stop loss at on the downside, close to about 95, 90 rupees. So both the banks, I think, should be on your radar, should be bought in the portfolio and kept at least for a couple of quarters. They will give you very good returns.
All right, so let's watch out for select banking names from there. Definitely great moves on select banking names, and case in point being the PSU banking stocks. Let's watch out for Canara Bank. Even today, PNB is also up. Even SBI is one of the top gainers. But other than that, let's also put the spotlight on the defense counters, because definitely there is a tension between what's been happening between India and Pakistan, and all these counters are definitely buzzing in the trade. But other than that, what we are getting to here is actually one of the news flow stating that India and France have signed a mega 63,000 crore deal to buy 26 Rafale marine aircraft for the Indian Navy. So that's the news flow that we are getting to here, and definitely a lot of these counters are buzzing. In case in point being HAL, which is now one of the top gainers in the FNO side. And Kunal, just wanted to have your take on HAL. What are the levels that you are watching out for this counter? Already a 5% up move. Do you believe more could be in the offing? And along with that, Kunal, the rest of the defense counters are doing very well. Do you see them as a good trading bet right now?
Yeah, I strongly believe so. In fact, not just about the current geopolitical situation which is going on, but Srishti, when you look at this over the last 2 months from February lows, look at the likes of HAL. The stock formed a bottom around 3,200 mark, or I think sub the 3,200 levels if I'm not wrong. And from there, the stock has jumped up 30%. So, which means that the stock on its own, and looking at the recent trend, has managed to lift off quite well at 4,400 plus mark where the stock is trading right now. We've already crossed the 200 DMA. We've crossed a series of the last, I think, 4 months of swing high, if I'm not wrong, from December highs or December somewhere for HAL. All of these are very strong, important data points. When you look at the price movement, when you look at the volume push into the stock price, and then this kind of a recovery. So I believe that this is a very strong sector to look out for. And then we look at the other peers. So it's not as if HAL is the only one which is moving up higher. You look at BEL, that stock has been holding up 300 levels quite well. You see the other shipbuilding names, Mascow Dock, GRSC, etc. Many of these stocks have started to look attractive. So I believe that this is a strong trend which is going on into the defense pack. You have to identify the leaders. In this case, I believe HAL and BEL are the two ones which are very strong in terms of the leadership qualities, and then followed by the other names from the defense pack.
That's the take coming in on the defense counters. On that note, we slip into a break on this edition of Closing Trades. When we come back, we'll talk more of the markets, given the fact it's going to be last half hour of trading session.
Welcome back to Closing Trades right here on ET. Now just half an hour of the trading session left. So let's get you some of the trading ideas from both of our experts. And Kunal, you go first. Tell us which is your closing trade idea for today.
That's on, I'm going a bit defensive in terms of the approach, but the stock is a lot more aggressive. And that's Sun Pharma from the defensive pack, of course, from the pharma sector. But the stock today is showing signs of an aggressive breakout, and especially a double bottom kind of a breakout. And today's move is backed by some decent volumes, strong swing patterns, as well as excellent candlestick pattern for Sun Pharma. So that's a stock which I'll be bullish on.
Pharma is a closing trade coming in from Kunal. Aditya, what about you? What's your closing trade?
There were a couple of them. One is a BEL shell that looks interesting to me. We're talking about defense, I think. So BEL offers an excellent risk to reward at current levels. For a target of 320, I'll go long with a stop loss at 292 on the downside. The second is Radico Khaitan. I think so after a decent bit of a correction, stock is now again showing signs of an up move. So at current levels, I'll be a buyer in the stock for a target 2600 on the upside. Place a stop loss on the downside at 2400. So Radico Khaitan and BEL are these two recommendations from my end.
So let's watch out for that. All the buy calls coming in from our experts. But Kunal, I just wanted to have your take on the OMC basket as well, because of late, that whole sector has been doing very well. Definitely a lot of triggers to the rally, especially with the case in point being the cool off in the Brent crude oil prices, what we have seen internationally, and they are the beneficiaries. BPCL, which has now surpassed that 300 level, HPCL2 moving away. Kunal, help us with your take on the OMCs. Do you believe they are good buys at these price point?
Frankly, this is a move which I was actually not anticipating for the OMC pack, Srishti, because, over the last 1 week or so, there was some sort of a fatigue which was actually coming out into the OMC pack. These stocks were consolidating, the volumes were dropping down, and the indicators were showing signs of a slight divergence. So I was actually expecting that these stocks may probably get into a time-wise correction, if not a decent price correction. But today's move is very strong and interesting. Example BPCL, the stock has crossed levels today. In the process of doing that, there are two things which have happened for the chart. The stock has broken past about the 200 DMA, and then the second is the more interesting one, where you're seeing a bullish engulfing kind of a candlestick pattern for BPCL. And then you look at the other peer charts, the likes of IOC as well as the HPCL. Even these stocks are showing signs of strength yet again. So which means that there could be a trading move which could be left to these stocks, and especially after the fact that the consolidation has been a bit narrow for these names. I would still not be very, very bullish on the trending perspective, but I think for traders who are at a 3% to 5% up move for stocks from current levels, there could be a decent jump on the very short term. So maybe a potential target, say for example, of 312, 315 for BPCL, and a very similar kind of a targets for the other stock.
All right, so that's the take coming in on some of these OMC counters. UltraTech numbers flashing at the bottom of the screen. If you see, the revenue is coming in at around 23,063 crore rupees. This is higher by about 29.7% on a quarter-on-quarter basis. The number that we are picking up from agencies on the profit number is around 2,482 crore rupees. So let's wait and watch out for some more details to trickle in when you talk about UltraTech Cement. For now, if you look at it, the company said they will be paying a dividend of about 77.5 rupees per share. That's the dividend that the board has gone ahead and approved. The profit, like I mentioned, is at around 2,475 crore rupees on a quarter-on-quarter basis. That's a jump of about 81.5%. Revenue is coming in at around 23,063 crore rupees, a jump of about 29.7% on a quarter-on-quarter basis. The company has said the sustainable volume growth of 7 to 8% is expected going forward. So let's wait and watch out for some more details to trickle in. The fact that the volume growth number that they are expecting of it to be about 7 to 8% going ahead, that's a key one to watch out for. The EBITDA margin is coming to around 20%. On a quarter-on-quarter basis, there's a substantial jump of about 374 basis points. So that is UltraTech Cement for you. For now, let's wait and watch out what is the EBITDA per ton number coming in for UltraTech Cement, the capacity utilization. All those numbers are also pretty important when you talk about UltraTech Cement. Other commentary coming in from the management is that the long-term outlook is indicating signs of improvement in stable demand, and that will go ahead and likely support the growth going ahead. So that's UltraTech Q4 numbers for you. We will actually connect with an analyst to try and understand and decode the numbers much better, because right now, if you look at it, the revenue and the EBITDA are in line with ET Now estimates, while the PAT has come in above ET Now estimates. The effective capacity utilization was 89% during the quarter, and for the entire FY25, they're saying it was about 78%. The stock is lower by about 1% or so, and we'll try and actually analyze these numbers. Chakri, good afternoon. Since you're with me right now here on the show, first cut for UltraTech Cement, if you can see it, 81% uptick on a quarter-on-quarter basis. PAT has come in above street estimates, revenue and EBITDA in line with estimates. They're saying the sustainable volume growth of about 7 to 8%.
Good afternoon. At first sight, the numbers look to be good. They look to be having beaten the consensus numbers. And, 7 to 8% volume growth is kind of what you expect. And, I think overall, the capacity utilization is lower, and therefore that provides the operating margin expansion as you go into the second half. But we'll wait for the details. But it looks like to be a quarter where they have actually beat estimates. And, I think the margins also are likely to improve.
Margins are also likely to improve, but in some of the other commentaries, and especially was related to capex, because the company has been taking underway a lot of capex. They say that the expansion program is progressing as per the schedule. UltraTech's domestic grade cement capacity has increased to 183.4 MTPA on a consolidated basis, as well as the India's leading cement player UltraTech is definitely eyeing a good demand, especially in the rural as well as urban market. And while Cheryl highlighted that a sustainable volume growth of 7 to 8% is expected going forward. But Chakri, along with that, a 7 to 8% volume growth can, when we expect that, and along with that, what we are getting to here is that the cement sector as a whole has been undertaking so many price hikes, and that is sustaining for a change. Do you believe a good time for cement could be in the offing, or do you believe that the much is already in the price, given the fact that all these cement majors have been doing very well of late?
Yeah, you're right to point out that they've been trying to increase prices. But we also have to take into account that the prices for cement companies have not been increased in the last 3 or 4 years. The increases at best have been below inflation rates, in fact. So, which means I think the cement companies therefore have sufficient leeway to raise prices further. And as interest rates percolate downwards into the industry and volumes pick up, manufacturing picks up and infrastructure picks up, that will do well for the companies. And as a result, you'll also see some amount of margin expansion, and price hike will help it further.
Today coming in on UltraTech Cement. Kunal, on the charts, UltraTech Cement and the rest of the cement counters, which one do you think stands out? Would you also go with UltraTech Cement as the fair choice?
I think there are many stocks which are actually starting to look attractive, Cheryl. So, we were discussing this, I think, last week, that, Shree Cement is the one which has been looking very strong. And, especially a point where, the stock had broken past above its previous 52-week highs. UltraTech Cement was coming very close towards that kind of a breakout. I think 12,700, if I'm not wrong, or just thereabouts, is the lifetime high levels for UltraTech Cement. The stock is still trading around those zones. I believe these are very strong charts, both of them, so UltraTech Cement as well as Shree Cement. But then I think the markets are also finding, other stocks as potential candidates of covering up the underperformance. You've seen Dalmia Bharat. I think last week there was a very strong couple of days of candlestick up move for Dalmia Bharat. And then you've seen the likes of ECC, Ambuja. Even these stocks have started to show signs of recovery. So the choice is getting a little bit more broad-based. Yes, UltraTech Cement and Shree Cement are the two ones which are considered to be the leaders because they generally set the tone for the entire sector. They are the ones which first move up higher, show signs of strength, and then it follows by other stocks to start to follow them. So I believe that we could probably be at a time where the leaders from this sector, they may take a little bit of a pause, but the sector would keep on trending up higher.
The leaders may take a pause at this point in time. Let's watch out for UltraTech Cement. Well, of course, after the earnings and after the commentary, that in the short term, there could be some challenges within the sector. The stock is down almost 2% as we speak right now. But with this, viewers, let's move on. And a slew of stocks are reacting to the earnings. We caught up with the management of Shriram Finance, IDFC First, L&T Finance and DCB Bank to understand the road ahead for the business. Listen in.
We had said that we'll peak in Q4 of FY25. And then we said that every quarter after that, progressively provisions on microfinance should come down. Basically, it's think of a wave. So initially it went up, peaked out, and then it is coming down. So we stand by that. So we already called out that Q1 of 26, you should see MFI provisions less than Q4. Q2 should be less than Q1, and Q3 should be less than Q2, and so on. So we feel the wave is receding, so to say.
Looking at growth of asset rather than just plain disbursement. Though we are guiding for 15%, but I would say, I mean, what we are aiming at is between 15 to 18%. So I think we should end up somewhere between that. We are not looking at growing at 20%, 30% AEMs. We would be very happy to grow at 17, 18%. I mean, though you are guided for 15, we would be happy to grow at 17, 18% and would like to focus on the bottom line more.
Overall, on the back of a reasonably okay, FY25, we are looking at a strong FY26. So we expect that as more and more rate transmission starts happening by the lenders to us, we expect that our weighted average cost of borrowing to ease slightly further. Though, we do not expect a much of easing in H1, we expect a reasonable amount of easing in H2, which obviously, on the long run will help us improve our NIMs.
In the coming few quarters, you would see more of organic loans coming through as compared to co-lending. So there will be a skew in favor of higher yield products within the credit framework which we have, the business strategy that we have adopted. We are looking at a NIM stabilization in the wake of 2 rate cuts that we've happened. Going forward, on the immediate basis, there has been some cuts on the savings account rate, which is an immediate impact. But as matters stand, at the present rate, we really believe these 2 items on the liability side and 2 items on the deposit side would help stabilize and shore up the NIM in the coming quarters.
Welcome back. You're watching Closing Trades right here in ET now. If you look at the markets, yes, we are holding up around those levels in excess of about 24,300 mark. Got a good strong handover from the global markets over the weekend, and we're trying to hold on to those levels at this point in time. A lot of stocks reacting to the numbers. Case in point being Reliance Industries, RBL Bank, Shriram Finance, L&T Finance, all of these counters reacting to their numbers in today's trading session. But Chakri, let me get your view. So far, the way how the earnings season have panned out, have you been really happy with it, or do you think that it just opens up Pandora's box and this will only lead to further downgrades?
The way the quarter has been panning out is there have been earnings cuts in general, and I think that trend is likely to continue. So if this trend continues, then Nifty might have an earnings cut anywhere between 3 to 5%. That would bring down the overall growth, let's say year-over-year growth to about 8 to 10%. But I guess, the market was kind of anticipating it with Trump, tariff wars, all the uncertainties. But now with the interest rate cuts and hopefully, there is some kind of stability also both on the border as well. And if all those things happen, then in the second half, hopefully with lower interest rates, the market will start moving the earnings upwards.
But let's also put the spotlight on M&M because that was one of the stocks that was in focus on the back of the deal and the acquisition of SML Isuzu being done by the company, where the company has announced that they will be acquiring almost 59% stake in SML Isuzu for 555 crores. And not just that, with respect to the SEBI's mandate, they will go ahead with a 26% open offer and the indicative price is close to 1,584 rupees. That means additional 585 crores is what M&M will spend. But well, of course, with respect to the EV by EBITDA, almost 7.5 times for this particular deal is what we have seen. That looks quite attractive, and given the fact that M&M will now have the exposure within the ILCV segment, and that will help the company to grow themselves and gain market share in more over 3.5 ton CV category. That is something that is taken positively indeed. And on this deal, we spoke with Rajesh Jejurkar, Executive Director and CEO of Auto Farms and Sector M&M. Let's go across and listen into him.
SML has an electric bus ready. We had not done any work on electric bus. Electric buses, they will be a very fast growing segment as well. So I don't think this is an indication of the fact that other parts of our business won't grow. It's just that what's the new avenue for growth, not just for the auto business, but even as a group. And a 5,000 crore business which can go in the next 3 to 5 years to 10,000 crore plus is not something which is insignificant. Right now, at least, SML Isuzu as a separate listed entity will stay a listed entity. The trucks and buses business of M&M stays within M&M. We will look at how we fully synergize operations and resources, talent, platforms to get the growth and scale. So we will have to, in our mindset, even though they are in two separate legal entities, think about it as one.
All right, so that's the management of M&M. You have TVS Motor also that's come out with the numbers. We'll get you the numbers in a short while from now. On the surface, if you look at the PAT, it's coming at around 852 crore rupees. The street was anticipating somewhere around the range of 730 to 750 crore rupees. Revenue is also beaten the street estimates 9,550 odd crore rupees. Let's wait and watch out for more details to come in for TVS Motor. As you can see it on your screen, a sharp spike on back of good set of numbers for TVS Motor because the PAT is coming at around 852 versus 485. The revenue is coming to around 9,550 versus 8,169 crore rupees. The spectacular numbers coming in for TVS Motors, at least on a YOY basis. But Kunal, let me come to you and let me get your BTST ideas.
So Cheryl, there'll be two buy calls, and the first one is one United Spirits. That's something which is starting to look attractive. In fact, today the stock has come back into a recovery after the last 2 or 3 days of correction. I think closer to this 1550, 1516 mark. Would look out for a buy with a target of 1620 for United Spirits, and stop loss could be kept at 1520. And the second would be a ban ABFRL, Aditya Birla Fashion. Today's candlestick pattern is more like a bullish engulfing pattern for the stock, breaking past about the previous resistances around the 270 levels. So keeping 270 as a stop loss would suggest a buy in ABFRL for a near-term target of 282.
So that's the BTST ideas coming in from Kunal. What about you, Aditya?
I got a buy recommendation on Sun Pharma. It's a fresh breakout from a downward sloping channel. Excellent volumes in trade today. I think can be bought at current levels for a target of 1950 on the upside with a stop loss at 1800 on the downside. Excellent risk to reward here as well. So Sun Pharma for me is a buy BTST idea. Second is an Oberoi Realty from the real estate pack as well. There are a few stocks which are buzzing around. So I think Oberoi Realty is looking interesting to me for a target of 1800 on the upside. Can be bought at current levels with a stop loss at 1600 on the downside.
Right, so those are the BTST ideas coming from both of our experts. Chakri, let me get your view on TVS Motor. What a spectacular number if you look at it on year-on-year basis. And if you compare it to what the street was anticipating, they've beaten those estimates. The reported operating margins have come in around 14% versus 11.3% on a year-on-year basis. How should one gauge these numbers? And do you think that this would set the benchmark for two-wheelers?
I'm just looking at the numbers on your screen and they seem to be very good, excellent numbers. And, they've beaten estimates and the expectation itself was a very strong number. So on the back of that, I think TVS Motor is doing an excellent job in execution. It looks like the volumes have held up and therefore it's allowed them to beat the numbers. So on back of that, clearly would buy TVS Motors, but I wouldn't expand and extrapolate TVS Motor results onto the other two-wheeler companies because these set of numbers are really, really strong.
Really strong numbers coming in from TVS Motors, and at a time wherein there was no fireworks seen in the two-wheeler segment, the margins, look at those numbers. That's the key takeaway, because I don't remember when TVS Motors last time hit a margin over 13%. As per my guess, this is the highest ever margin being reported by the company, because for now we have seen TVS Motors sustaining a margin over 10% mark, which was commendable in such an environment, but 13.2% is what the company has clocked in, and that's phenomenal. And along with that, on all the parameters, be it revenue, profit, as well as EBITDA, the company has surpassed the street estimate with a very big number and a very big margin. Not just TVS Motors believe that the kind of performance that the company has given, because we have seen a turnaround in the electric division. Similar could be said for Bajaj Auto. Maybe this is a time to look out for some of the two-wheeler counters. And Kunal, I just wanted to have your take on TVS Motors first, because the stock is already up 3%. Very strong set of numbers. But in respect with that, how do you see Bajaj Auto as well on the charts?
Yeah, I think Bajaj Auto and both of them, of course, are distinctive charts, because Bajaj Auto is still trading, sub the 200 DMA. the stock is still yet to recover, more than 30% of what it has lost in the last, I think, 7 or 8 months of the straight price correction for Bajaj Auto. TVS Motors, of course, is one of the stronger charts. The stock is holding a much above the 200 DMA by a margin of, I think, 10% or so. So both of them are, completely different charts altogether. But I believe that eventually what happens is that when you see a stock moving up higher, from the sector, and that gives confidence to the other stocks to start to get back into a breakout mode. So the negative news flow generally gets absorbed in a much more convenient manner for the stock prices. So I believe in that context, maybe there could be a time where Bajaj Auto in the near term could also get into a breakout. I would look out for, say, 8,500, 8,600 as a near-term target for Bajaj Auto. But the move for TVS Motors today is also very, very intriguing. And this indicates that the stock is one of the leaders from the entire two-wheeler pack. So expecting TVS Motors to move up higher and continue to trend up on a stronger manner. But even Bajaj Auto can start to see a decent recovery.
All right, so that's the take coming in on two-wheeler majors, given the fact that you have TVS Motors coming out with spectacular set of numbers, with margins, profit, revenue, all of them beating the street estimates, with the stock actually taking a big jump right now, trading higher by about 2.5% as we speak. So watch out for the rest of the two-wheeler majors as well, and how they actually perform in a trade or in times coming ahead. But Chakri, let me get your word actually when you talk about the pharma space, given the fact that this one, a lot has been riding on this particular sector, given the fact that you have a lot, we're talking about the tariff front, then it is a go, no-go zone. Everyone's contemplating on that particular front. Which side of the fence are you when you talk about pharma?
I think all the kinds of uncertainties are kind of reflected in the price. The export-facing companies clearly are the ones more at risk, like Dr. Reddy's or Glenmark's or Lupin. But I think, Glenmark, for instance, has corrected fairly significantly. Valuation-wise looks all right. Dr. Reddy's, for all its uncertainties, also valuation is looking all right. And whereas, therefore, I think, if anything, I just buy them for about maybe a 10-15% return from current levels.
The take coming in of pharma space. On that note, thank you so much, Chakri, Kunal, as well as Aditya, for joining us on the show and giving us your take on the markets. As of now, TVS Motor coming up with finer details, saying that excluding the PLI benefit of previous quarters, the Q4 EBITDA margin would be at around 12.5% against 11.3%. So on back of that, you've seen a tad bit of downtick come in on the counter. But nevertheless, you have Snehi standing by patiently to take us through the closing trade. Snehi, over to you.
Well, absolutely. Let's take a look at how today's trading session has panned out to be, and it's been excellent given the kind of moves that we've seen over the course of the weekend coming in from global markets. We have done pretty well today. A 1.2% uptick coming in on the Nifty, 24,324. So it's looking like we are going to positively end above the 24,300 level, at least for now. We have a couple of minutes left for trade. Let's sum up what today's trading session has looked like. It's a 285-point uptick coming in on the Nifty, and almost a 280, 300-point uptick coming in from the day's lowest point. So looking good for the Nifty right now. Sensex in tandem with the Nifty, a 1.23% uptick coming over there, and 80,100 is what we've managed to cross in the Sensex at present. Nifty Bank has outperformed both Nifty and Sensex, a 1.5% almost uptick coming in on Nifty Bank. 55,500 is what we had crossed. We've receded a few points from there, but nothing to worry about. The advance decline ratio has been pretty even over the course of the day, and it is only very nominally tipping its scales towards the advances today. But India wakes on the back of that, 1% lower. We're very close to the 17 mark, so no complaints on that front as well. Let's take a look at what the broader markets have been up to in today's trading session. Let's pull up a Nifty mid-cap index, and 1.5% uptick coming over there. So outperforming the benchmarks is the mid-cap index, and let's also see what the small-cap index is up to. That's underperforming the market largely, and 0.8% gain coming in. It's a good move coming in, but when you compare it with the mid-cap basket as well as its peer indices, the small cap is underperforming the market. Let's take a look at some gainers and losers in today's trade. Reliance was the number one Nifty gainer in today's trade. That's kept the Nifty afloat all throughout the day. A 5% uptick coming in on Reliance. You have Sun Pharma, that's up 3.2%. JSW Steel, M&M, BEL, SBI, Tata Steel, Axis Bank. All of these have seen gains of more than 2% today. What's not done well, constant pressure coming in on Shriram Finance in today's trading session. Almost a 5% cut is something that we have seen on that stock today on the back of a weak set of Q4 numbers. HCL Tech was down almost 2%. 2%. UltraTech was looking rather flat. We've just had numbers coming from UltraTech and TVS Motors as well. So that's HCL Tech, almost 2% lower in today's trade. Let's pull up an UltraTech and see, now that the stock has had some time to react to its earnings, what UltraTech is doing. It's almost 1% lower despite a PAT beat coming in and all the other numbers looking in line. Just to sum it up in terms of sectoral moves, PSU banks were your top winners today, followed by pharma, auto, energy, metal, realty and media and FMCG. Nifty IT is the only sector that was on the flat line rather. Not much to worry about on that front. But that's how we're wrapping up today's trading session. We look to have closed above the 24,300 mark. We'll give those rates some time to settle. But that's how we wrap up today's trading session. A very positive one for us.